Hello, this is Kirk Spano with Investing 2020s, and it's all Aemetis all the time. That's what we've become. Aemetis is up $1.22 today. Is that right? No, that can't be up $1.22. Let's refresh my other. Oh, it was up $1.22. Holy cow! Look at this sucker go. Aemetis, take a look at this chart. It has just screamed higher from below 2 to over 7 in just 31 days, I believe. 30 days. So we have a heck of a 1 month rally. And I wanted to show you this website. I've been using Fintel since late last year. And I haven't shown it to you because I was on my learning curve. I wanted to make sure I was going to keep it. I compared it to shortsqueeze.com and some of the option websites that have their data on unusual options activity, which is pretty easy to find anywhere now. And so I have been using, bar chart in the past. Stock Rover I still use for fundamental screening, and I'm using Fintel because it has quant models. I like the way that they allow me to mess around with the quant models. And then I like all the data on shorts and options and really just about anything else. So with this site, they have merged Zacks with different option sites, with Short Squeeze, with Stock Rover, with Quantopia, with all sorts of stuff. So this site for $95 a month is pretty awesome. And I have been using it mainly for the short activity. So I just want to show you. So this is the overview of Aemetis, and it has quite a bit of information. One of the things on this front page are the top investors. You see BlackRock and GMO, Encompass, GMO again, and one interesting one down here, State of Wisconsin Investment Board, which I presume is because they have a member of Stifel on the Wisconsin Investment Board. I do know that at least one member of the Wisconsin Investment Board subscribes to my service. So that's kind of cool. They have a small position in Aemetis, go all the way up, and you can see what everybody owns as a percentage. And the accumulation has been light but steady. And I think that is probably good for us. If you take a look at the short interest, we are able to get all sorts of data. They have a quantitative short squeeze score, and it was just a little over 90 last week. It was 93 it topped out at. So a score of 100 means that you're in an active short squeeze. What this measure from their quant formula is that it's either imminent or in the middle of or right next to or coming out of a short squeeze. Right now, it looks like we have maybe through next week on the short squeeze. We'll see. It's hard to know. The shorts did not cover very many shares in the last reporting period, but of course that's trailing 2 weeks. So that's 2 weeks behind. This data here, short shares availability, is from one of the large prime brokerages. But as of an hour ago, there were no shares available to borrow for shorting purposes. That's pretty interesting. I mean, just look at what happened. So if they borrowed shares, it didn't move the stock price down. That's pretty interesting, right? Short borrow fee rates. Look at what they've been paying in interest last month. 99% is the interest rate that they're paying today. So when you get that 25% because you took part in the lending program at your brokerage, I want you to understand they're giving you a quarter of what they're making. You should not be lending out your shares. If you're lending out your shares because, oh, look, I can make 25% for a couple of weeks, you are damaging the appreciation of a stock that you own. Do not lend out your shares. The stock is almost quadrupled in a month. You want this squeeze to get as powerful as it can get. So you should not be lending out your shares of Aemetis. If you are, you're being penny wise and pound foolish. Do not lend out your shares. Contact your brokerage. Tell them, no, what do I have to do so that you don't lend out my shares? And if you're on one of those programs, get off of it. They give us the off volume exchange data. So there's some dark pools which end up eventually getting reported. You just don't know exactly when the trade happened and who exactly it was. but still about half of the share volume is short. And that means that this number has a long way down to go. So you're probably going to see quite a bit higher on the stock price if the people who are buying lately, right? If people who bought a couple weeks ago don't get stupid and sell. Now, I know, I'm up 200%. I'm going to sell some of it. I'm going to sell all of it. I'm going to sell half of it. The data says this should go to between 17 and 22. I'm showing you the data, even though I know you don't understand it. The stock price should go to between 17 and 22, and it could happen by August if the shorts cover, and the shorts will cover if we don't give them shares to borrow. All right, back to Aemetis, because that's all we do. This is the page with the options, the put-call ratios. And I want to show you some things here. This is the put-call ratio looking forward. I love this page. This is one of my favorite pages in the whole website. Remember last week, somebody was buying all those June puts? They're going to expire this Friday. Okay, so they bought all those $5 and $7.50 puts. So that's probably why the price of the stock is up today, because max pain is, like $7.51. All those puts expire worthless at $7.51. So whoever bought those 3, 4, 5,000 puts last week, right here, these almost all got bought last week. I don't have any expiring there, actually. Mine expire in July and October. So of these puts, around 1,000 of each are me selling puts. Nobody wants to buy puts on Aemetis later in the year. Why is that? What does Aemetis have coming over the course of this year? 5 more catalysts and potentially an IPO announcement of the refinery in India. I know that I'm one of the only people saying that Aemetis goes over $20 this year. I forget the name of the research firm that also said it. I've shown you their research. Is the name of that research firm Stonehenge or Stonegate or Skip a Stone or Stoneroo? Something like that. Wasn't that it? Somebody will remember. In any case, nobody wants to buy puts on Aemetis right now. Now, that doesn't mean that the number won't jump up at some point. After these Junes expire, somewhere probably right after the 4th of July, they'll start buying those short-dated puts again. And as the stock goes higher, more people will buy puts because they'll say, this company's ahead of itself. But remember what I've told you. The hard assets of the company net of debt are worth about $1.5 billion. That's a stock price almost at 40 then. So, I know the people who don't do any actual math on the things that they own and they don't subscribe to stuff like this. They don't know. They're like, I just made 300%. I better sell half. I get it. And I thought like that when I was a broker back in the 90s and early 2000s, until I realized that most of the brokers are knuckleheads too. And I was like, well, man, I called the .com crash. They didn't listen to me on that one. So I started studying quantitative analysis in the early 2000s. Then in 2006 and 7, I was buying dinners, thousands of dollars worth of dinners, telling people that the real estate market and all the derivatives were going to crash. As soon as I said the word derivative, they were like, huh? What's a derivative? What is the CDO you speak of? So look, I get it. I understand that people don't understand what they don't understand. It's kind of like Rumsfeld. There's knowns that are unknown. There's unknown knowns and there's unknown unknowns. And for most people, it's unknown unknowns. They don't know what they don't know, so they don't think about it. And they try to find the easy way. In any case, you can see how that curve is, and that's very interesting to me. Here's another one I want to show you. There it is. Call volume. Who started buying a whole bunch of calls right here? Early May. A couple thousand, actually 3,600 of them were me. How many of them were you? Right? Of these open interest calls, which they're not showing any of the Januaries, but all the January calls, how many of them were you? Right? So there's a lot of calls for January, $7.50. Just go look at the open interest. I mean, look at that. That was just June. That was them trying to force the price of Aemetis down. So this is all those puts that got bought a couple weeks ago. They tried it. I think, what was the day that the stock went back down to 5? Was that Monday last week? They were trying to force it down and they failed. And I told you why that is. I want you to think about something. The average trading account of a lot of these millennials from the research that we've seen or that I've seen is between $30,000 and $60,000. They're trading between $30,000 and $60,000. Of the people that subscribe to my letters, how many of you have 6 or 7 figures? Yeah, it's a lot of you. I know that there's 5-figure people who are learning right now. I get it. But most of the people who subscribe to my letters are 6 and 7-figure investors, and some 8s. I think 1 or 2 9s. So now that we have started buying this, we bought the calls, which force the market maker, right? Forces the market maker to rebalance his book. This option position that they took, which expires in a couple of days, I'm fairly certain that was a last-ditch effort to try not to have to cover their margin. They're screwed. If Aemetis is over 750 on Friday, they're so screwed next Monday, it's off the charts. So, I don't feel bad for them because the stock should have never been this cheap anyway. And the fact that they were able to push it to 1/12 the hard asset value, I think is pretty mind-numbing, right? So they deserve to get the zuck kicked out of them. They do. And I hope it happens between now and August because I would like to buy another property. And these guys might provide me not just with a down payment, they might buy the whole freaking farm for me. So good for them. I do not have any sell orders on anything right now, with the exception of half of my calls at $15. So for me to get $15 on my January $7.50 calls, stock would have to be about 20, 21, right in there. Depends on how much time value is left. I think that might happen by August. I was originally counting on it happening towards the end of the year, but there's so much, just this spring is just so loaded. I mean, what are they going to do? Where are they going to get short shares from to not have to get blown up on their margin, right? So I just keep looking at all this data, right? Net long premium. And I'm looking at this. I'm just like, what are they going to do? Here, this must have been the day that they bought all those puts. I don't know what they do. I don't. I'm looking at all this. And the Greeks don't help that much, I don't think, just yet. But I think if we don't screw up as longs, the stock could be $20-ish in August. It really could be. It could even be the next couple of weeks. So somebody asks, I've been rebuilding or building a position in Aemetis. Look, I think that you just keep selling puts and buying stock while it's still single digits. If you get one of those 50-cent pullbacks, buy it. People are like, well, but I want to buy it under 5. Well, I'm not sure you're going to get that chance. In fact, I would be selling in the money puts, not out of the money puts, if I really was trying to get a position. So, for example, sell $7.50 puts for like July, see whatever that premium is, and at least you get a little time value and a little bit of value from the volatility. So it'd be like buying it for 25 or 50 cents cheaper than the price is today. However, if the price is 15 or 20, even that doesn't help you, but at least you have to keep the premium. This is why I usually buy before it starts going up. Why people get angsty with me. Oh, it just went down 30%. Well, yeah, but from 4 to 3, I mean, that's, not really that big of a deal. But it's 30% or 25%. It's $1, right? When something's 100 and it goes down 25 or 30%, that's a little different than when it goes from 4 to 3. It really is. But the percentages are the same. Yeah, but it's a fucking dollar. The value of the company is $1.5 billion. Right now, Aemetis, if Chevron came in today and wanted to buy Aemetis, they'd have to start at $1.5 billion and they'd still have to go higher. $1.5 billion, at least then management at Aemetis would know that they're semi-serious, right? So I am going to actually sign up for an affiliate account with these guys. This website is so good that I'm literally using it every day. Oh, because we're not really all Aemetis all the time. Just want to point out something here. Let's see if I can find it. There we go. Little space company called AST Space Mobile that we have a position in. And it's interesting to me. There's not a lot of shorts available on this one either. Not a lot of shares available to short on this one either. The borrowing rate is still in the teens, which is pretty normal. So that allows the shorts the ability to short because they're not paying much in interest. as this starts to go up, like we saw it with Aemetis, that's when things get interesting. Because that means that either the stock has to go down or it has to go up, because you can't borrow expensively for a long time. So I'm watching this and I'm trying to figure out when we're going to get a squeeze. My hope is that they're able to force this down into the 3s or 4s. If they can do that, if they can do that, that'll be very interesting to me. So you see the shape isn't very different. What the shorts do is they buy short dated puts for cheap. They try to get the market maker to rebalance in their favor. And they'll do a little bit more over here than in time here. But price matters. Put to call ratio just jumped up a little higher. But look out here. Not a lot of long dated puts. So they're trading. When I say traders being traders, that's what they're doing. They're trading. They're doing everything with an outlook literally of weeks rather than quarters or years. What I have found to be the easiest thing to do with traders being traders is wait for them to get out over their skis and understand this because it is gospel. The people who plant the ideas are big deals. They're big shots. They're big hedge funds. They're the people at the primary banking institutions. They're the people at Citadel. They're the people at pick a big outfit. And they run this down the line. And then eventually it gets into the Discord room or on Reddit or wherever. And the $30,000 to $60,000 account people who don't know shit from Shinola follow along. And they all spin narratives and they go on Yahoo and they go wherever. They sneak an article into Seeking Alpha here and there. You know, they go on Twitter because they think somebody actually reads it. And they get these narratives out here and they think they're Hindenburg. And they're not. The guy Hindenburg has some brains. And if you'll notice, he shorts big companies. He doesn't really short little companies. Why is that? Because a real short is looking for a problem with a business. If you're shorting little companies that it's apparent are going out of business, you can't make money in that because the rates to borrow are too expensive and they're small. The big money to be made is in shorting big stuff because big can become little, just like little can become big. So just like we lined up a whole bunch of catalysts with Aemetis, and we saw that the shorts were out over their skis, or at least I did. I didn't show you this until today because I know there's people watching me besides you. And I didn't want them to know that the math says they're going to get crushed until I wanted them to know. And right now I want them to know because I know that some of them will look at this tomorrow. I would be kind of surprised if by August this doesn't make a run at 20. I really would. The only thing that stops it is if people take profits because they just have no idea what's going on, right? I sold 10% of my calls at 205, I think it was, last week sometime. And I mentioned it in the chat rooms. Why did I do that? Because everything else I have is now free. Between collecting option premium on selling options and the fact that I was at like a 900% gain on my calls, my effective cost for owning Aemetis at this point, shares and calls, is zero. The last time I was able to pull that off, I made $750,000. And right now I have brokerage accounts that are up 20% from a month ago because the positions that we set up, which were 6, 7, 8% of their portfolios in Aemetis, has exploded to like 30% of the portfolios. And because I manage other people's money, I had to sell a little bit of those calls so I can say, look, you're free rolling now. I have not sold anything personally. Zero. I've only sold in client accounts because as a fiduciary, I have to. If I didn't and this thing crashed, you know, people would be like, well, you're an idiot. But in my personal account, I have not sold a share. In fact, I have orders to buy. So if it does pull back a buck, or at this point, $2, I would be buying more of the calls. I am focused on buying calls if I can get another opportunity. Because at this point, my price on the calls is 29 cents. So my cost on those January 750s is 29 cents. I feel pretty good about that. So with AST Space Mobile, we will keep an eye on it to see if we get a similar setup. When we go to this website, it will give us a whole big list of companies, and they have a score. I won't go exclusively off of the score because I want to know something about the company. Some of these companies are going to go to zero, and I'm not just going to randomly, invest in one without knowing. But AST Space Mobile was in here somewhere. I forget what the number was, but anyway, you go here, you go ASTS. There you go. 243rd, most likely to squeeze. But Aemetis was 54th. And we saw what happened there. So somewhere in the top 100 is where we probably find our opportunities. So we saw Carvana squeezed, right? How much higher can it go? I don't know. I haven't done the analysis. But you start finding companies that can do those jumps. Now, the thing with Carvana is I think it's a temporary squeeze. I think it was just cleaning out the market. I don't think it's a very good company. Now that we've found out, and I found out firsthand because I bought my car online. I just didn't buy it from Carvana. I bought it from some guy in Minneapolis who's got a warehouse and a little dealership, and he does a good job. And because it's the internet and he pays his $3.50 for a Google ad, per impression, anybody can do what Carvana's doing at this point. And all your big dealerships in your towns are doing it. So there's just no point. So here's one that's interesting, MicroStrategy. I'm pretty interested in the Bitcoin linked companies. So I think at some point, the news on crypto out of the US courts isn't nearly as bad as it sounds right now, as the SEC is pushing for. Now, I'm not really interested in shit coins, but Bitcoin is different. I like Bitcoin. I still think Bitcoin is pretty clearly being adopted internationally, and it will end up being part of the hedge against the dollar getting too strong in the future again, along with the BRICS currency, which is basically China's approach to doing things. But they own a lot of the Bitcoin too. China still owns a ton of Bitcoin. So between Bitcoin and BRICS, I think BRICS is really, like I said, just a trade hedge, but Bitcoin is a wealth hedge. And you're going to see more and more family offices adopt it. We know that that's happening. We've been following that. And more emerging markets are going to adopt it as a hedge on their sovereign balance sheets. And we've seen that too, over 130 countries around the world, so that they're going to do it to some degree. So as those countries have the money to do it, they will do it. So the drift up on Bitcoin is going to be long. It's a very long ramp, and it's probably going to six figures in the next 3-4 years, something like that. So interesting ideas that you can pull off of here. If you are a rare member and you're doing swing trading, this is probably a website for you. If you are strictly fundamental, long-term position trading, then I still think Stock Rover is the absolute easiest thing for you to use to monitor your positions and find new ones. All right, going to call it a day. Just going to title this one Aemetis, more on Aemetis, something like that. And I do think we are close. We are really close to another jump. So we'll see. I mean, I just don't know how the shorts continue to afford paying that interest and have the price go against them every single day. We'll see. But, I said that today would be a pretty good positive day, and so far it is. I think you probably get it to settle a little bit sometime this week, Wednesday, maybe Thursday. I don't know. I don't think that all the shares will get covered, just the people with the most pain. But then when those puts expire, I don't know. I don't know what they do. I think they're running out of money. So unless somebody gigantic wants to come in here and just short, I don't know what could kill this. I just don't, because there's hardly any shares to borrow to short. They'd have to do it all with options. And if somebody comes in here and wants to buy, 10,000 puts, I'm going to buy a bunch of them I'm going to sell it to them. I'll collect their premium. I'm going to double dog dare them. And I know there's several other guys out there like me now, almost like we talk or something. With that in mind, I will be in Vegas starting Thursday. So this is the last live program before Independence Day. In your service, you saw an article yesterday called Ask Me Anything. So go ahead and ask me anything on those articles or in your threads where I told you to. And I will write a couple articles answering what you asked over the next couple weeks when I have time off, when I need to get my mind off of poker. I will probably record a couple of short webinars, videos, and post them on YouTube. I'll throw them in the chat rooms as well. And for those who are looking further out, I will be going out east for 2 weeks in August, the last 2 weeks of August. I think we're going to start in Maine, go down to New Hampshire, and then end up in New York City. Maybe I'll stop in Stamford and visit some people there. For those of you not aware, Stamford is where there's an awful lot of hedge funds. Some people I know, maybe that I talked to recently. All right. Have a good day. Don't get antsy. There'll be volatility. You should be buying the dips on Aemetis, but I wouldn't be selling anytime soon because net asset value of this company is about $1.5 billion, and I think we're going to make a run at it in the next year. All right, take care.